Welcome to all the listeners to this Push Ventures podcast, Push Your Advantage, and thanks a lot for tuning in. In our podcast, we're providing you with thought snippets on the African technology startup ecosystem. And if you like our podcast, then please do like and subscribe so that you're notified whenever a new episode is out. Today's topic is the importance of exits. So we'll talk about why exits are necessary for the ecosystem growth, then the role of mergers and acquisitions, both from a startup's perspective, being acquired or acquiring another company, and the wider role of exits for ecosystem growth. Let's get started with why exits are necessary for ecosystem growth. In short, being an investor ourselves, they provide you with returns on your investment, which means you can cash out and realize substantial gains on the investments you've made. And the beauty is that this liquidity can now be actually injected into new startups or other investment opportunities, which can then grow the ecosystem even more. Furthermore, a successful exit can validate your thesis that you have as an investor, which can serve as evidence when it comes to raising a new fund, maybe even a bigger fund, which again allows you to now grow that ecosystem. However, you have to bear in mind as well that if you cash out too early, you might lose out on the potential upside. And at times, bear in mind that unfavorable market conditions can also really help you to essentially be disappointed. So you should be wary when you're exiting from an investor's point of view, as well as from the startup's point of view, because ideally the startup also wants to provide the investor with the substantial upside. This is particularly important to bear in mind when you're now thinking about listing on a public stock exchange, because that's where you have to contend with that market volatility and the unpredictable stock performance. But as mentioned, sometimes the capital and time that you invested in one startup might be better placed elsewhere. And this is not to say that we don't like that startup anymore from an investor's perspective. It is just looking at opportunities and oftentimes earlier stages that you might want to make use of. And that's again where the recycling comes in. So exits are essential for investors and the ecosystem as a whole because they provide those opportunities for returns, risk mitigation, and as well liquidity. But always be careful because it always depends on each particular startup's unique circumstances. And we all have to balance those benefits against the possible downsides. Now, when you're looking at the role of mergers and acquisitions, and for those of you who may have followed the news, Safaricom got approval at their recent shareholders conference to actually enter that space, which is hopefully going to be very interesting and great for the environment. Now, mergers and acquisitions can play a vital role in fostering growth and shaping the landscape because they can accelerate that growth. They enable a startup to grow much faster by combining resources, technology, and talent with a bigger organization. This can help them reach critical mass and scale the operations much more quickly than they could do independently. So when you're now being acquired, what you have to think about, it allows you to enter markets or industries that you may not have access to before because big organizations have existing customer bases, right? And that diversification can reduce dependence on a single market and enhance your long-term sustainability. It can also provide you with access to capital because if you're getting acquired by a financially sound big organization, then they can really invest in you based upon their long-term strategy, which can fuel further growth and development for the organization. But it doesn't always need to be a full acquisition or part acquisition. Sometimes a collaboration effort, such as a partnership, can already help diversify risks and reduce the financial and operational risks that you have navigating in a market as a young company. Now, you can also think about acquiring a smaller company or think about this as well as the headaches that you can have when you're acquiring a company or when a company is acquiring you. Because whilst you're getting access to advanced technology and intellectual property, which you can integrate and offer as product or services, you can also get talent and professionals, specialists that you have by sourcing from those companies because they were already working in these companies, which can be critical for your own innovation. And you can gain a competitive advantage by building your own product further out with new features that you get by acquiring a smaller competitor, for example. But when you have complementary offerings, you sometimes can just get more market share this way. And we've seen this a lot when it comes to, for example, Uber and how they acquired in the early days wherever they could, or when they sold out in order to exit a market. But the challenges that come with that is always you want to keep your innovative spirit and always remember, if you're not buying a small organization or you're being the smaller organization that is being bought by a larger organization, there's always a different corporate culture. A lot of times, a lot of bureaucracy as well, which can stifle your creativity. And it can sometimes literally just waltz all over your cultures and values, which can lead to a misalignment and create difficulty in how you're actually collaborating within the company. That could also lead to either, if you're acquiring that company or being acquired, to key talent leaving, right? Because they feel like perhaps a lack of autonomy or changes in management which undermine the benefits of such an acquisition. Also, acquisitions are always expensive in terms of legal and financial and operational costs. So for you as a small company, it might be very tricky to acquire another smaller company unless you have a specific race for that. So when you do that and when you do consider that, really make sure that you're benefiting from this acquisition. Further, when it comes to the whole market, excessive M&A activity can also lead to market concentration, which reduces the competition and limits consumer choices, which can stifle innovation and harm the ecosystem in the long run. And poorly planned and executed M&A deals can not just have a financial loss, but also damage your reputation. And in general, an over-reliance on mergers and acquisitions as a growth strategy may deter startups from developing your organic growth capabilities and innovation strategies, which hinders the natural evolution of the ecosystem. So consider M&A a double-edged sword for startups. While it can provide significant upsides when it comes to growth opportunities and resources, it also carries the risk of integration, culture, and talent retention. So therefore, both sides, the startup as well as the corporate, should evaluate the strategic rationale properly and weigh the benefits against the challenges. Further, in smaller markets such as ours, always remember that regulatory bodies may have a thing to say about acquisitions. Because if you're having, let's say, 3 players and you're creating a monopoly by merging all 3 of them, somebody might say something. So bear that in mind. What is, however, the wider role of exits for the ecosystem growth? And this is something which we at Push believe is something critical that needs to happen over the long run for our ecosystem to thrive here. And that is role models of successful entrepreneurs that are being created. So you're creating new angel investors and mentors that then support and fund the next generation of startups. Because it's always remember, it's not just the investors who are cashing out at some point, it's also the founders. So if the founders and the core management team who've built a company now cash out and use some of that cash to inject it back into new startups, that can really create a beautiful growing ecosystem and a wonderful asset for the ecosystem's vitality. That knowledge sharing that they bring, those experiences that they gain during that journey from inception to exit, those are invaluable. And those founders and employees from those early exits, when they share that knowledge with the broader ecosystem, they foster also a culture of learning and improvement. Then what it further does is successful exits attract more venture capitalists and angel investors because people see that there's money to be made, which again creates more sources of capital for the ecosystem. Because when you can see an exit path for your investment, people are more willing to invest. And high profile exits can then obviously improve that reputation on a global and a regional scale, which means that more international investors, accelerators, and corporate partners are wanting to come and enter the market. What you should bear in mind, though, is an excessive focus on exits only can lead to overvaluation and unrealistic expectations, which creates bubbles and eventually crashes. So we have to be careful that in the pursuit of exits, that we don't follow those quick exit strategies, but focus on the long-term sustainable growth strategies. Because favoring those will allow us to really focus on innovating and developing the market rather than just being short-sighted for some quick financial gain. And when startups and exit and founders and key talent, they often move then to new ventures or leave the ecosystem altogether. That's also a drawback. So let's say you create a new startup and after 5 to 10 years, you cash out and you have a lot of money now. Where are you going to go? Are you going to stay home where you made the money, or are you going somewhere else? So this talent churn that comes with that can at times also impact the ecosystem negatively, because as I mentioned, whilst those role models and successful entrepreneurs are also adding knowledge to the ecosystem, if they now decide to leave and spend their life somewhere abroad, they obviously take knowledge and experiences with them. So focus on those diverse and resilient entrepreneurial ecosystems that we need to create, with a focus on innovation and value creation over the quick reliance of an exit. Be wary also that regulatory hurdles and tax implications that are associated with exits at times can create complexities and deter potential investors and entrepreneurs from participating in the ecosystem. Why I'm saying this right now also, and why you have to keep that in mind, is at the moment politically in East Africa, for example, we are focused on finding ways to generate revenue. So if you're now overtaxing society or overtaxing also the ecosystem, you're taking away the incentive for people to perform, which hopefully is not going to happen. But bear that in mind, because it's an important thing to remember. Now, hence, while exits are important for the growth of young companies as well, and for the ecosystem in a broader context, as it is very important to have that capital, expertise, and vibrant entrepreneurial culture within the country, which allows people to want to stay as well, so that we don't lose that talent after an exit, so that they don't go away, but they enjoy what we have to offer within the country. So altogether, we need a balanced approach to ensure that those exits contribute positively to the ecosystem. If we summarize what we just now said, let's just say that exits are critical for the ecosystem, growth for investors, and for startups alike. Acquisitions by big players can help startups scale at speed by utilizing existing structures, but do mind the potential cultural conflicts that they can bring. And role models add a critical element to the ecosystem, because they allow nurturing and future growth. And remember, success attracts more players into the ecosystem. With that being said, you can find our podcasts on YouTube and Instagram and Facebook as Push Venture Capital, and on Twitter we are as a hashtag Push Your Advantage. And we'll be back next month with another podcast on the African tech ecosystem, which is available on Spotify, Apple Music, AfriPods, and of course on YouTube.